Hello listeners, and welcome to the Montel Weekly Podcast, bring you energy matters in an informal setting. In today's pod, we'll start off by addressing the increasingly volatile geopolitical climate amid the escalating conflict in the Middle East, stalemate in the Ukraine, and concerns around energy infrastructure. Then we will take a close look at the gas market. Wholesale prices are trading around €35 a megawatt hour, a far cry from earlier this year, and not least in the same time in 2022. Why are prices softening? And what is the outlook for the winter? Are we in the clear, or are markets still quite jittery? I'm Richard Sverrisson, and helping me to discuss the geopolitical situation is Henning Gloystein of Eurasia. A warm welcome to you, Henning.
Thank you, Richard.
Let me just start off by talking a little bit about where we are in terms of prices. I mean, we're quite a lot lower than where we were earlier this year, and also compared to last year. What does this mean in terms of European industry? Are they sort of happy with these prices now?
Happy isn't the word I'd choose, but they can survive. We get this comparison quite a lot that last year Europe's heavy industry was on the verge of having a heart attack. They survived that, but needed some intensive care, and now they have like a drumming headache. It's not life-threatening, but it would be good for industry. Prices were still somewhat lower, and we think that could happen after next winter.
Okay, so maybe 2024, you're expecting to see some prices ease, you know?
We do, yeah. We think that if we get through this winter with healthy inventories, let's say we come out of European inventories at 60-65% out of this winter, sort of mid-March 2024, then Europe can return to what we'd call a new normal. And if this is a really cold winter or a long winter or some disruptions happen, we think that would be delayed to maybe 2025. But basically, the emergency is pretty much over. In order to have or to see real energy shortages this winter, we'd have to see an extraordinary sort of a conflagration of or a combination of really bad events happening, and we think that's very unlikely.
But you think now that with what's happening in the Ukraine and Russia is not really going to have any impact on any of the gas flows to Europe, or even the gas storage? I know some maybe is stored in the Ukraine.
I mean, yeah, things could still happen, of course. I mean, the remaining gas through Ukraine could get cut. Russian LNG to Europe, which is still coming in, could get cut. But even if that all happened, we wouldn't see actual shortages. We'd see price spikes, but real energy shortages like we were fearing this time last year would still not be happening. Because if you look at the inventories, even the last 10 days, which were actually pretty cold across continental Europe, you could see, even if you just basically project that throughout the rest of winter, we would come out of winter with some gas in storage. It would be pretty empty, but there'd still be some gas around. Now, if that happened, so really long and cold winter, that's a scenario where we say a new normal would be delayed by another year, but it would take a really long and really cold winter or some major disruption to get to that. And otherwise, we think we should be in a fairly normal situation by springtime 2024.
And obviously, you know, a lot of new LNG terminals, whether floating or fixed, they've also helped the situation here.
Yeah, absolutely. I mean, I really think this is some credit is due to the industry and to policymakers in Europe. They have adjusted really fast. I mean, had you told people in early 2022 that Europe could add, I don't know, half a dozen floating LNG terminals and Germany would become a major LNG importer, and that they could live with that, with the loss of the biggest gas supply to Europe, without serious energy shortages, I think most people, including myself, would have shaken their heads.
I laughed you out of the room, I think. Maybe.
Yes.
But you mentioned Russian LNG. That's still flowing into Europe. Is there any chance that there could be some sanctions imposed on those kind of shipments?
Yes, we think there is a high risk of this happening. In fact, it is. We tell our clients that to watch out for spring 2024. If Europe can get through this winter without any major trouble, and if the situation in Ukraine is not improved in any way, which sadly we don't currently expect. I mean, Mr. Putin gave a speech today saying all his war goals are still in place and he'll see this through, then the European Union might see itself forced to launch a 12th round of sanctions, which might include LNG imports. Because these are really uncomfortable headlines for EU governments to when they come in, it's like, Belgium is still importing LNG from Russia, so is Russia, so is Spain. But of course, that gas doesn't just stay there. It goes to Germany, it goes all over Europe into the pipeline system. So they're uncomfortable headlines. So if the EU can live without Russian LNG and the need is still there for further sanctions next year, I think that would happen, yes.
But my next question is purely speculative in many ways, Henning. But if there were to, if the sanctions were to be imposed on Russia, what kind of impact would that have on global LNG flows?
Well, I mean, that's the sort of stuff you actually have seen in the oil industry a little bit, with Europe phasing out shipped crude oil from Russia, especially via the Baltic and the Black Sea. It wouldn't cause a shortage globally because shipped gas can be shipped elsewhere. So the Russians could ship it to China. There's other buyers in the world that probably have to discount it as they're doing in oil, but it would drive the price up in Europe a little bit. But I actually think Europe could do this fairly easily now, because if you look at the overall imports, Russian LNG makes up, I think, between 3 and 5% of overall European gas imports now. So they could probably get along without it, especially as Europe is still making very strong efforts to structurally reduce gas consumption across Europe, and this will continue. So squeezing another 3 or 5% of gas out of the system is probably possible. Yeah. But of course, you are reducing the number of available supplies, and that's always a bit of an issue.
And that could, squeeze supply and make sure that maybe the new normal is delayed by another year, in your words, or
Precisely.
that kind of scenario.
And so when we say new normal, it's not the old normal where everything was lovely and there was ample gas and it was really quite cheap. Gas in Europe is a scarce commodity, and that means it's unusually expensive, and it prices it out of all sorts of things. In power generation as a baseload fuel, it doesn't really work. Energy-intensive industries are struggling with the price of gas to remain competitive. We've seen all the headlines. So the new normal is not a nice normal. It's like I was saying, living with a headache.
Yeah, absolutely, a thumping headache probably as well. I think we've seen moving from Europe into more what's happening in the Middle East, because that's also extremely worrying. Not least for those who are involved. But, we've seen missile attacks on tankers in the Gulf from Yemen, which are quite close to Gaza. What's your outlook on risks to energy supply routes, out of the Middle East and where, most of the region, most of Europe's LNG comes through that region?
Yeah. So we currently don't really see a major risk of a conflagration of the conflict in the Middle East. So that would mean Israel goes to war with Iran. Iran tries to shut down the Straits of Hormuz, or the Red Sea gets totally shut down by the Houthi rebels from Yemen. We only see a risk of about 10% of that, but 10% it's still a fairly high figure, because, as you say, the Middle East oil and gas supply is exceptionally important, so it is a problem. And I'll say this as a geopolitical analyst, but it is worth keeping in mind, in 2021, barely anyone thought there was a major risk of Russia shutting down all its gas supply or most of its gas supply to Europe. Now, there is a risk to oil and gas supply out of the Middle East that, very few people foresaw the problem as it is happening now. The catastrophe that's happening in Gaza right now, very few people, including ourselves, foresaw that. In fact, just a year ago, the European Union was trying to sign all sorts of deals to unlock LNG out of the East Mediterranean as a replacement for Russian gas. And that's all off the table now, because the initial deal agreements between Israel and Lebanon, you can totally forget about those. And Israel's and Egypt's relationship is also being very, very heavily tested in this environment. So that's another geopolitical risk to gas supply seeing now. Just to look forward a little bit, in 2024, if President Trump came into power again, or that would be 2025, who knows what he'd do to gas supply? He might raise tariffs on US LNG to Europe. I mean, it's Trump. We don't know what he'd be up to, but we do know that he doesn't really like Europe. And then suddenly our most important supply of LNG gets more expensive. So the considerations of where you get secure reliable and affordable supply has become really important. And risks that many dismiss have happened. So hence, when I say we don't really think there's a major risk of a total blockage of oil and gas out of the Middle East, okay, we don't see a high risk, but the risk exists, and that's not good.
Yeah, absolutely. I mean, what's your view on the kind of longer term view of both LNG exports out of the Middle East and also the production of gas from I don't know, what's the Leviathan field and others,
So, I mean, the gas is there, of course. The East Mediterranean gas reserves are enormous. Leviathan's there, the Aphrodite Cyprus field. That would be really convenient for the EU because it's in the EU. I mean, that would be fantastic. The problem is it's deep water, it's geologically active, and it's geopolitically too active. So it's a huge problem. And by the time you've extracted, developed it, the European Union gas buyers have a time window that is getting smaller every year. If you are going to spend, I don't know, random figure, $10, $15 billion on a LNG facility, greenfield, you need a return on investment. And if that window closes by, let's say, 2045 or 2050, that window is really short. And yes, I know there's carbon capture solutions in theory around, but if you look at how much commercial carbon capture is out there now, we'd have to deploy it really fast. And of course, it just adds cost. You are adding a CCS cost on top of gas, which is structurally quite expensive at the moment. All the time, renewable solutions and storage solutions are getting cheaper, and they're local and they're domestic and they're clean. So I think that's where the trend's going.
Do you think there's then a recognition that LNG and gas will be a significant part of the energy mix in Europe, 2030 and beyond?
2030 and to 2040, absolutely. I haven't seen any credible solutions for totally phasing out gas out of Europe before 2040. I think that's totally unrealistic. Especially if you look at the German coal phase out by 2030, that's in a few years' time. They've already phased out their nuclear plants. You cannot build renewables and storage solutions that fast. I'm a major supporter of things like offshore wind and hydrogen electrolysis and solar. Great, all fantastic, but you can't build that fast. Look at Poland. I mean, their coal reliance is enormous. So I don't see a way for gas being totally phased out of Europe, even in power generation before 2035, 40, maybe even 45. But after that, sure, power generation. And then, of course, you're still stuck with industrial gas. We'll have to wait and see where that leads us.
Especially with green hydrogen, I think.
Yeah.
But in terms of, if it's still going to be part of the energy mix to up to 2040, maybe even 2045, then European companies, even countries potentially need to sign deals. They need to find some of the gas out there and get that shipped to Europe, don't they, for up to 20 years?
Yes, but to be fair, we have seen a fair few longish contracts being signed in Europe, especially with the United States. They're much more flexible than the Middle Eastern suppliers. I mean, if you look at Qatar, normally they demand a length of 20 to 25 years. They're very inflexible about your right to resell it, about your flexibility in monthly, reductions and increases in cargoes. And of course, we just mentioned the slight geopolitical risk here. And this is one of the reasons why countries like Germany or the importers there have been a bit reluctant to sign such long-term binding deals because they know that their demand is going to go down and they don't want to be sat in 2045 with huge contracts that are inflexible. And credit to the American sellers there, they are much more flexible. And the term contracts are shorter. It's also because, shale gas has a shorter lifespan, so they're perfectly happy just to sell you gas for the next 5 to 10 years and then see what happens then. But that is the solution most European buyers tend to prefer at the moment. And of course, if you go to Northwestern Europe, you've got Norway, which is still capable to raise gas supply for a few years. That probably meets most of the demand. But on the fringes, of course, you do need a couple of long-term contracts, or you just rely on the spot market. And there are some buyers in Europe who say, it might be better to just rely on a really volatile spot market for the next 5 years, rather than binding us into a 25-year contract that we don't know what the end looks like. But those are debates at executive levels that I think are being had across Europe at the moment.
Absolutely, especially with these kind of price levels and the geopolitical situation, for sure. Just a couple of questions, Henning, before we go. But I think The first one, we saw the COP28 end this week. What's your view? What's your reaction to what the deal that was signed?
I think this is a classic glass half full empty kind of deal. If you want to criticize it, you can. It's not a phase out of fossil fuels. I would argue you couldn't really expect that from a COP that was hosted by an OPEC member. It's not realistic. I personally would go with the glass half full aspect. It does talk for the first time of a transition away from all fossil fuels. The last time anything like this was achieved was COP26 2 years ago in Glasgow, and they only talked about coal. Last year, nothing was really achieved. So this year, at least there is that agreement, as flimsy as it is, but it raises the pressure for next one. And the tripling of renewable output goal is good. The loss and damage fund is another one of those. You can criticize it as being paltry and there's barely $1 billion in it, and you probably need more like $100 billion, maybe even $1 trillion. Okay, but the fund is there now. So the political pressure will increase every single year for rich governments to just put another $1 billion in. So I think it's progress. Is it too slow? Yes, but it is progress. So I came out of this one. Well, I didn't attend, but when I saw the deal, was it a day or two ago? I thought, that's a little bit better than what I thought it would.
So you weren't totally crestfallen here, then?
No. I mean, I'm quite skeptical about the next one, though.
Okay, yeah.
It's another petrostate in Baku. But that's the regionality. It had to go to Eastern Europe. And of course, the war in Ukraine impacted that. The Russians vetoed anything in the EU. Okay, we'll have to wait and see. But so I'm skeptical about the next one, but we've got another year to worry about that.
Yeah, we'll try and maintain an open mind there, Henning. But just the final question. I know that you mentioned Germany and the import of gas. I mean, the country has some very ambitious plans, should we say, to build gas plants and to make them hydrogen ready as well. What's your view here?
It's a little bit like the glass half full empty, cautiously optimistic or mildly skeptical, somewhere in between there. So, I mean, we've talked about this before. With hydrogen, I am quite confident about green hydrogen in certain aspects for hard-to-abate industry. It already is starting to work in the steel sector, in the chemical sectors, feedstock industrial gas replacement. To use it as an intermittency solution for offshore wind, it is starting to work with modern electrolysis units. Whether hydrogen gas is a viable alternative into power stations, I'm sitting on the fence. I don't really know because, but I haven't. So the solutions aren't there yet. This is what I mean. Why I think it'll work in heavy industry, because the solutions are already there and they're being rolled out, albeit slowly, but they are happening now. Hydrogen-fired, gas-fired power stations. I haven't seen it yet. Engineers say it works. Okay, great. But whether it'll be affordable, we'll have to wait and see. And it's the same with heating. There, I'm even more skeptical. I don't think people want hydrogen in their houses.
No, I mean, the cynic in me would say potentially you have hydrogen-ready gas plants, but you can then get to the point where you say, I'm sorry, we're not ready to burn hydrogen. It's too expensive and the technology is not there. Let's just continue burning gas.
Yeah, of course. I think those quiet discussions happen, and hope that CCS works, or we just offset the hell out of it.
Exactly.
And buy half of the rainforest in the world. Yeah, sure. Those are all problems. I mean, I think we probably know most of the solutions to get to net zero, especially in power. But the fine-tuning, we haven't got there yet.
The details are very important.
And whether hydrogen works as a fuel in the gas-fired power station or as an electrolysis to resolve intermittency of renewables, I probably lean towards the latter.
No,
I'm not an engineer, so we'll have to wait and see.
Absolutely. Henning, fascinating as ever. Thank you very much for joining the Montel Weekly podcast. And now, to talk to us about current market dynamics and the outlook for prices ahead, is our old friend, Bryan of LSEG. A warm welcome to you, Wayne.
Good afternoon, Richard. Nice to see you.
So gas prices have normalized. They've maybe stagnated around a certain level. They're much, much softer than they have been this year and also obviously last year. What can we expect over the coming weeks and months?
I think at least, as you mentioned, prices have normalised a bit. I think at least for the remainder of this winter, I think we're looking at we've seen the uptick after what happened in the Middle East around October 8th. We saw prices trade higher and a lot of uncertainty. Since then, we've seen, demand has remained pretty weak. Supply, Norway, etc., has been strong, and we've seen prices we've lost that sort of premium, so to speak. And we're now trading around this 34, 35 level, perhaps even we've testing 30 at some points. And I think what we're experiencing now is a bit of comfortable situation, but there's still risks ahead. We still have, January, February, March to navigate. As much as the fundamentals in terms of in both sort of Asia and Europe are pretty good in terms of storage levels, obviously in Europe, storage levels in Japan, storage levels in Korea are pretty strong as well. Demand is still quite tepid from Asia, apart from obviously the sort of more price sensitive importers from Southeast Asia. They've obviously are buying at these current levels. And the market is quite benign at the moment. And but we still need to be aware. And as I've mentioned before, upside production potential is limited. We've got Norway running at full power, more or less, and we expect that to continue around sort of 330, 340 for the remainder of the winter period.
In terms of MCM a day.
Per day, sorry, yes.
Yeah.
You've got, UK production has been reasonably resilient. And we've got still strong levels of LNG imports, which has allowed us to, get storages to a good level. And we've seen in times of, we've had these couple of short spikes. We've seen storages step up, a few changes in the price to incentivize some withdrawals. And we've seen storage ably manage demand. And I think if we look forward, I think if things remain as they are, we'd expect prices to sort of trend lower. But I always say experience teaches me that this won't be the case. And if we get a simultaneous cold spell in, both the Northern Hemisphere and also in Europe at the same time, our price would then have to rise accordingly. And I think that's the risk here. We mentioned this, 100 be 45 to 50% at the end of the winter period being in stocks. At the moment, that looks about right. If we see a real, uptick in the weather, consistent cold spell, uptick in demand in North Asia as well, we could have a shortfall, of an extra 10, 15, say, BCM. That takes us into a very different situation moving into injection season. So I think we still see some resilience in the forward price for that reason. But at the moment, it all looks quite rosy.
Yeah, absolutely. But it's still jittery, isn't it?
Correct. Yes, and we say it's comfortable but fragile in respect of there's still quite a lot of risk, and that's due to the lack of flexibility we have. I mean, we've got increased capacity, but we need to LNG. I'm talking, but we still need to pay to attract that. Russia's, they've got their flows coming through Ukraine. Obviously, we've lost all the volumes that we know about, so that lack of flexibility means we still have to be aware, and I think the market remains slightly jittery until we start knocking off the months towards the end of March.
Okay, so
then prices...
Exactly. Yeah. So January, February time, if there are some kind of, if there are outages in Norway or something happens, the geopolitical risks are obviously still there.
Still on the table.
Yeah. Excellent. I mean, what do you think are the biggest risks to meeting storage targets next year?
Do you mean for the end of this?
Yeah, for the end of next year. Yeah.
Sorry, do you mean the end of winter?
Yeah, the end of
this winter.
Yeah, exactly. Yeah.
I think again, I've highlighted. So we've seen, residential demand hasn't really been that strong, but in the absence of a lot of these, last year there was a lot of campaigns: turn your heater off, save energy. Prices were extremely high. I think now that would have less of an effect, and I think a sustained colder spell, people are going to reach for their heaters a lot quicker. I mean, I certainly, a couple of cold spells already, I've ramped up my heating. Last year, probably would have just put another hoodie on. So things like power generation, we know that gas for power demand, has been softer this year. However, power demand is starting to increase. And I think that could then see an increase in gas for power demand. Uncertainty in terms of renewables. We've seen some spikes when the wind's low, etc. But it needs to be consistent, which we know that probably won't happen. French nuclear, a lot stronger this year. So far, so good. We've all know what can happen with that. So that's another risk as well. But I think on the supply side is obviously the LNG risk. If Asia really starts to ramp up demand, which it's still quite tepid, but it can change in an instant. So I think these are sort of, there's a combination of risks for me, but I think the sort of weather risk of an extended cold spell in both Atlantic and Pacific basins for me would remain the biggest risk.
Yeah, absolutely. And that tends to happen in January or February, as you mentioned, But there's barely any spread between the front month and the looming summer prices here. Wayne, what does this mean? Why are summer prices so high or relatively elevated at the moment?
Because of that uncertainty I mentioned, we still haven't navigated through winter. We're not even 50% through. We're obviously close to it, but we've still got these periods where, as you've said, typically January, February, we've seen these spikes in cold weather. We've seen it happen, and we've had quite a lot of mild winters over the last few years but this winter should not be as mild as last winter, and we've seen a couple of cold spells already. And I think you need to keep that premium. But if you look at the summer spread for winter 24, it's around €5 at the moment. And as we again knock off the month approaching injection season, we'd expect that price to start to fall. And if you look at some of the later spreads, you can see them tighten up as well. But now, if you look at the market, there's a sort of €1 to €2 spread between day ahead. And this happened similarly last year. If you look at the market last year, day ahead, and there was a lot of divergence. And then we come into December and Jan, everything had harmonized. And then as we get towards the summer again, prices will start to trend lower. So,
I mean, in the sort of medium to longer term, do you think we will remain structurally higher than we have been because of this, the inherent insecurity of the geopolitical situation at the moment, the absence of Russian pipeline gas and the dependence on LNG? Is that going to remain, that we're going to...
Correct.
Yeah.
Correct. I think, like I mentioned, this limited potential for increased production or imports, unless you pay for them, of course, means that prices will have to remain at reasonable levels to enabling us to be able to react if indeed we do need to import more volumes. But so I think that risk is going to remain until that big wave of LNG comes online, sort of 2026. I think you look at the market, you can see the sort of differences in prices around these sort of times. So I think, yes, we're going to have to stay there due to the lack of flexibility.
I mean, Henning, who was on the pod a little bit before you, yes. Henning, but when he talked about the sort of new normal in terms of the industry having to react to that, and instead of being sort of pain and heartache, it's now just a throbbing headache. That's
a nice way to describe it. And I think he probably would have spoke a bit about the industrial demand, and it's something we've been talking about in our reports and looking at the analysis of that. And we said around a 1% or so increase, and we've seen that gradual increase. But the last couple of months, we've seen it pick up a bit. And again, price related. But I think for the industrial demand, we still think it will remain relatively flat. There is some increase. But if you look at the overall sort of overarching Eurozone itself, looking at the economy, I think, will the end user demand be there to help that increase in industrial production? Because we're still not looking great in terms of, if you look at a lot of the PMIs, I think Germany got a little bit better last month, but still in the quagmire, really. Industrial demand remains in a downturn. It still remains, compared to previous years, we're in a very different times, and some of it structural, some of it we've seen offshoring, etc. So that, again, is something that we think will continue over the next few months at least, and maybe we see a slighter recovery in the summer if there is an economic recovery, which doesn't look that great at the moment.
I talked with Henning also a little bit about sanctions and the possibility that Europe could impose sanctions on Russian LNG. What's your view here? Do you think that's a likely scenario?
Not in the current climate, as I mentioned, and we've spoke about this limited sort of upside in terms of production and imports, etc. And then if you take away Russian LNG, which we know has increased significantly since the invasion, that would have happened a long time ago if we were really serious. I think it's, yes, give the option, but I think it's preparing for the next couple of years when we get additional supply globally, which should loosen up the global balance and allow more gas to flow, and we're obviously increasing our capacity. So at the moment, I think there's no real appetite to sort of stop these imports currently. So I don't see it happening this winter at all. And even next winter still seems pretty tight. So maybe this time next year, you might start to see that sort of move start to happen. But in the short term, I certainly don't think that will happen. It would have happened already if we were serious. But that shows the reliance on Russian LNG imports.
Absolutely. Do you think on the flip side, there's a chance that Russia would just stop them?
In light of the sort of lack of market for the gas that used to come into Northwest Europe, I certainly don't think so. And the sort of the financial repercussions for them over the last couple of years have been severe. So why would they then further sort of lower their income? So I don't see from the Russian side at all. I'd be very surprised unless something developed in the war, which is still going on. There was some sort of adverse developments there, and maybe that could be a case for it. But I certainly would see that really not happening.
Yeah, I mean it's not a huge chunk of the LNG imports, but it's important. It's significant.
Every bit's important, as I mentioned, in our current situation of lack of sort of flexibility and options. And I think that still remains an important source
for sure. Sticking on the topic of sanctions, could potential US sanctions on Arctic LNG 2 in Russia, could that have what kind of impact could that have, do you think?
That could, would definitely have a slight bullish impact, but again, the implications are not very clear of how, we're still trying to understand exactly how this would work, and it's meant to start next month. So it's meant to start next month, so it's going to be interesting to see how it develops. But at the moment, I can't really give a view because we still don't know the implications yet. It's not in black and white. But again, it would probably provide some bullish incentives to the market because every molecule counts at the moment, despite the extant bearish circumstances at the minute. As we know, that can change quite quickly. So,
Henning and I chatted a little bit about the geopolitical risks. Is this something that concerns you as well for potential imports through the Suez Canal, the Straits of Hormuz? I mean, the potential closing of that of routes through that area. Is this something that you're worried about?
Yeah, I mean, we've seen already. I mean, we saw the initial uncertainty or risk premium as soon as the sort of the situation in the Middle East escalated on that weekend. I think of the 7th, 8th of October, and I think we saw that concern. But since then, we've seen there was no real significant impact. If you look at Egyptian exports, 70% of them have been delivered so far in 2023. So there's a small impact, but not big enough. In terms of the vessels, that is a concern, and I think that remains a concern, but I don't see it. While it's a risk, I don't see it happening over the coming months. And I think if you look at where prices are now, we've lost a lot of that, most of that premium that we did put on. It's still there, but would it have already happened? Probably already. I think we've already seen things escalate way beyond what we thought would happen. So I think the fact is what we've already seen, and we still haven't seen any impact on. We've had a couple of vessel incidents, but nothing that's really, impacted our market, materially, so to speak.
What about production in the region there? I mean, Leviathan and both an LNG and production in the region. Do you see that being just like stopped for the time being?
No, because you've seen what happened. It's restarted at the moment. And I think if we're being honest and looking at the development, I think the operations or the situation, there doesn't seem to be a massive amount of months of this to continue. So I think we're getting close to some sort of end point. So I think that risk is already starting to dissipate. However, it still could remain a militant attack or something could happen. But the fact it's been restarted and we're continuing now, I still think the risk will always remain there. But at the moment, I think it's sort of ebbed away.
No, absolutely. I mean, I think...
But it's bubbling away in the background, like we're all aware of this geopolitical risk. And we said it's not just what's happening in the Middle East. You've still got the war in Ukraine going on, which a lot of focus has shifted away, but it's still happening. And
also they shouldn't... Issues around energy infrastructure.
Yeah.
Anything happens there, and we talked about the jittery market, Wayne, didn't we? And something happens there, boof.
We spoke about that before,
No.
We saw what happened with, before when the pipeline, there was a problem with that pipeline, and then once the investigation said it was a ship dragging an anchor, but we still saw risk premiums rise just on the news of it, and it wasn't even a big issue, but it's more about the sentiment around infrastructure, and it's something we've spoke about before and something that remains a risk. But if you look at what's been done in terms of the UK and Norway, they've set up protection drones, etc., to manage that. But that still remains a risk, but I don't think is as strong as it probably was last year.
With supply so tight, Wayne, as well, do you expect, for example, European companies, maybe even countries, to be looking to sign more long-term deals with suppliers out there, just in order... Or maybe going into the spot market? I mean, what's your view for the shorter term? Because the long term future for gas is still uncertain in some quarters, and you've got the pressure coming from the COP, where they, it wasn't committed to phasing it out, but it was transitioning away from fossil fuels, which is,
the key words voluntary from COP.
Yeah.
Voluntary, key words.
But do you then see there's a long-term future for gas in the European energy mix? And do you expect maybe that, companies should potentially be signing 15, 20-year deals to secure those supplies?
We've seen a couple of deals signed of late, a bit longer. But I think if you look at the reluctantness from European players to commit to long-term contracts over recent years, even in the light of what's happened in terms of the disruption to supply, the loss of Russian molecules and the tightening of the European market and over-reliance on LNG, I think that we still haven't seen it. I think you could see a couple, but I'd really... When you've got this large wave coming online in a couple of years, which will loosen up the balance, I think that makes you less reluctant to want to sign a long-term contract. Mm-hmm. We know these waves are coming online from 25, 26, where we're going to see large swathes of LNG capacity. And that, I think, could you then sign into your long-term contract now, and you get to 2 years down the road, you've got 8 years left, 12 years left of your contract, and the spot market has fallen. But I think you're right in terms of the guarantee. It guarantees, it reduces your exposure, of course. But I think the attitudes of Europeans and the pressure from governments probably limits the option of many long-term contracts. I mean, we saw BASF sign and a couple of other players sign, but I think that's. I think in terms of overall with supply, I don't think we'll see huge ramp up in sort of long-term contract signing.
No, interesting. We talked about. As you said, Wayne, you mentioned your experience in this market, and you can't take anything for granted. You see, okay, we're at very low levels compared to where we have been in the last 18 months, but anything could happen.
Yeah, I mean, we've lost about 20%, I think, the prices of TTF in the last few weeks. And it just goes to show how the volatility is still there. The nervousness is still there. But at the moment, we're just riding this sort of comfortable wave of, sort of low heating demand, robust levels of supply, which is sort of keeping the market quite sanguine at the moment. But I do believe, the experience tells us that things will change, and we see that in the sort of tighter spreads, and like you mentioned about the summer.
Let's hope there's no major beast from the east this coming winter.
One can only hope.
Yeah, exactly. Wayne, thanks very much for being a guest on the Montel Weekly podcast.
You're welcome. Thank you.